Clayton. How are you guys doing this afternoon, and how is trading so far?
Good, Gary. Just wanted to say one thing. Are we live right now? It looks like we're on preview. Can you just double check?
No, we should be on live. We should be live. I can double check that, but we should be.
We're good.
Yep, we are live, dude.
So
killing
back
it.
in action. Yeah, all is well, man. So here's the deal. I posted my on my YouTube channel, did my weekly outlook yesterday. I'm posting a protest for profits beard. And it's not, no, this isn't some like civil movement. It's this for the Aussie, man. I'm growing this beard out because of the damn Aussie. Until this thing pays me. The AUDCAD, the Aussie dollar, the Euro Swiss, the dollar Swiss. Those four positions right now, I'm like, I will get paid or I will not shave. I'm fed up, man. I'm so annoyed. So that's the deal.
Well, that is great. Let's just hope that you get paid, all right, so you can get clean. I'm just kidding.
Yeah, if I would have been doing that for the last 3 months, my beard would look like Santa Claus right now.
I know.
So, I mean, I'll tell you, I love that you talked about the Aussie dollar because I'm going to go out on the ledge and say I think it's like an 80% probability trade that we could talk about in the Aussie dollar. For those that aren't in it yet, I'm already in it. I know a lot of people are already in it. If you're not in it, I think that there's a really beautiful setup that we could talk about in a little bit. But things are going well. In the Money Flow trading room, we're buying the pound dollar just for this week, a short-term pop. I don't see a huge rally in it, just maybe back to some 129.50, 130 levels. But that trade's doing well. But overall, good. SPAQ.
Yeah,
Rocking and rolling, my friends. We'll talk about that again, too. We'll talk about that again this week.
Yeah, for sure.
All right, well, fantastic. Well, I'll tell you something. I did a bit of a road call in my trading room today and said, hey, how many of you are in on the Aussie basket and selling Aussie right now? And, man, there was just like me. Everyone's in. Everyone's trading. Pound Aussie, they long on pound Aussie. They long on Euro Aussie. They short on all the base pair Aussies. So this is huge right now. And let's talk about this because we had the statement came out last night, or at least the policy, and in the RBA statement, they actually mentioned one thing that was very, very important. And I know that this plays the same role on every country, right? Is they don't want to have a strong currency. Now, we saw the rate decision a couple of weeks ago that we saw a nice little rally in the Aussie. But again, the Aussies do not want, in order for them to build the economy and get the economy back where it needs to be, they need outside money coming in. Exports, they need traveling, they need all that good stuff to start helping with GDP, but at the same time, a weaker currency is going to help do that, right? And a strong currency is definitely not in favor of a better economy or a stronger economy. So this is a big thing, and that was actually in the statement yesterday. They said we don't want to have a strong currency. And we know that's a factor with all countries, right? So with that being the case, with us at these high levels with the Aussie, this is what we're expecting. We're expecting some downside move in the Aussies. So hopefully everything's going to play out. Let's go take a look at a couple of currency pairs. And I want you guys to talk me through the stuff as we look at these pairs. So let me go into, first thing I'm going to go ahead and jump into.
In the statement, they're stuck between a little bit of a difficult area, though, Gary, because one of the notes in the statement was that the members noted that the downturn hasn't been as severe as it was expected earlier in the COVID cases. And so that's a great thing, right? But the bad thing about that is the only way that they could naturally weaken, or I guess non-naturally weaken their currency, is to come in and lower interest rates. But if it hasn't been as severe on their downturn economically, then they can't lower interest rates. So it's one of those, they're kind of stuck in a place where the economy is too good to weaken the currency, but it's not overheating, or it's too it's kind of in this middle where they can't weaken it, they can't strengthen it. It's kind of naturally going up in itself because the Australian economy is not doing as bad as maybe others are doing. So I think that leads us kind of back to what I think we're going to talk a lot about today, which is the technicals. And again, we've been talking about this. There's a lot of fundamental noise, and I think the technicals are going to rule the day over the course of the next, at least until through the election, Gary.
Yeah, but you know what? The thing is, and I think you hit it on the nail right there, is the technicals are really going to read what the market's going to do. But it's also great to know that there is sort of like a concern with the RBA that, yes, they don't want a stronger currency, so they're going to be trying to do everything they can to keep the currency down. Now, obviously, more circulation of the currency will bring in reduce the value. So we'll take a look and see, because that's what we're really good at, right? That's what we really experts at, is identifying what the techniques are saying and how that's reading the directional bias of the market. So let's take a look again on this right here, Tyson. Is on your point. Here we have the AUDCAD, and we've got price moving at the top of a very, very important resistance level. I call it the strong resistance right here, and you can see here at this at these bodies right here. See how the market creates that resistance at the bodies, and our price fails to break above there. Well, that became a very important level, and we've got that level tested here, and now we have that level tested here again. I actually went ahead in my trading room, and I don't know what you guys did, but I started selling again AUDCAD, so I'm adding position on the AUDCAD sell right here. And if we can get anything, it's going to be this amount of pips right here. And I think it calculated to about 164 pips to the downside. So we've got about 164 pips to this point right here. And if it breaks that level, then we'll follow this downward move further back down south. But so this is what's important to me. Now, what I like to do, guys, and I'm sure you guys do the same thing, right? We like to go ahead and take a look at one currency pair, right? And then go ahead and compare it to the rest of the basket. So take a look at the AUDCAD, look at the Aussie JPY, and then see if all the Aussie crosses are pointing in the same direction. Then we clearly have a currency that's dominating the direction out of all the other majors, right? And so if I see this happening on all the other majors in the basket, or against the other majors based on that basket, then what I want to do is I want to go ahead and start investing more into that currency. So this is the first one right here, right? Then if we go to the second one, which is the Aussie Swiss franc, and I'm going to flip over to these reasonably quickly. But if you look over here on the Aussie Swiss right here, we also had resistance, and we're starting to head back down south. You can see today's trading wasn't very strong, so this is just a slight correction. Let's go to Aussie JPY. Aussie JPY, let's pop that open again. Here's the Aussie JPY. I like the Aussie JPY. We've got this rising wedge. I know Chris spoken about this a couple of times in our session. I think Tyson, you may have even mentioned yourself with this rising wedge right here. We got to trade above those previous highs, and now we're looking for the market to break out of the wedge and down back to the bottom of the wedge down here at 72.11. So I like that setup, confirming exactly what you've seen in the Aussie CAD and Aussie Swiss. Let's go to Aussie. Let's go to your favorite one. I was going to say Chris's favorite one, Aussie New Zealand dollar. Take a look at Aussie New Zealand dollar right here. We came up here. We're seeing beautiful divergence setting up over here. Price looking to work his way back down south. We're looking for another move down below this level of 1.0799. So it's on its way. It's looking for it to push down. We've seen a little bit of a push from the Aussie right here. Let's go take a look at the Aussie US dollar. And Aussie US dollar is doing the same thing as the Aussie JPY, giving us that big rising wedge right here at a 127, which is a fifth wave move. So with that, guys, all that information, when I look at this and I see that there's definitely a strength coming out, or at least movement coming out of a pair like the Aussie, and is across the board against other majors and showing that that's the dominant pair or dominant currency against the others, it's certainly, and then you look at the news and you hear the news and they say, like, we don't want a strong Aussie. Something's brewing. Something's coming on. And the techniques are telling me that we could be, and we've been talking about a weak Aussie for some time now. The rate decision didn't help because it caused a bit of a rally. And just like you said, Tyson, about COVID-19, it wasn't such a big thing. They see a quicker rebound. And so that just created this big rally in the Aussie. But I think we may be in a short-term rally, and we're now looking for price to go ahead and move down because of the concerns of a stronger rally will slower the rebound in the economy, because a stronger Aussie will create a slower rebound for the economy due to the fact that they need a weak currency in order to bring in money. What's your guys' views on that?
Yeah, no, I agree 100%, Gary. Actually, I'm looking at the Aussie CAD trade that you had up, and we pull this back up, and I love the risk versus reward like right now on this trade. And the reason I love it right now is because I think you could place a stop right above that U-turn high, right above where you have that bearish top up there. And if we break above that, what I see is, and you're going to have to go back a little ways here, but there's an interesting gap at 97.65 back, and I'll give you the exact date it happened. It's kind of it's what would be called in the stock world to be called kind of an island reversal, where it gapped up and then it reversed, and prices really never went back up into that area, and it happened on way back on December 2nd, 2018. Yep. And so essentially there's a gap that was filled, but a lot of times we'll have what's called a reverse gap that will go back up there. So 97.65. So my point is this, is if we break above that kind of current high that we've put in over the last few days or last week or so, then I think we're going to have a clean shot up, probably about another 100, 150 pips, and then we'll have a reversal. But I think right here is absolutely worth taking a shot with a stop of, right above these highs, recent highs, and then a target. Where's your target, Gary?
Target would be, let's go back to the daily, and I'll show you where it's going to be. In the short term, we look for a target down to just to the bottom of this contraction phase right here, which is around about 94.88. And then a break of that, we'll go down a little further down south, because what we're looking for is actually a correction move in this big move going up right here. So this big move going up right here, we're looking for price to go back down a little bit deeper. We'll probably get to around about 1992 and then turn around, head back up north.
Yeah, I think the way that I would do this is I love the short. To make it conservative, you could sell on a break below today's low. You could target, I think a target of 94 is very realistic, very doable back into those levels, and a stop on a close above 96.55. I love this trade. I think risk versus reward, and I think the timing of it right now is good. If we do break or we close above those highs, then I do see another kind of 100, 150 pip kind of push higher to fill that gap, that weird looking gap all the way back in 2018. But I really like the trade right now. Saying that, if we do break above, then we could see some strength, short-term strength in the Aussie versus the CAD. But I like the dollar strength against the CAD. I also like the Aussie strength or the dollar strength weakness against the yen. So bottom line is, I say all that to kind of loop back. My favorite of all the Aussie pairs, if I had to pick one, would probably be the Aussie yen or the Aussie dollar, because I'm looking for more strength in the yen and the dollar than I am in anything else in the currency world right now.
Okay, well let's take a look at that thing, and if you want to go ahead and chat on this Aussie US dollar setup right here, I think this looks like a really good opportunity. Chris, what do you think about the Aussie US dollar?
I'm right there with you. So, we're talking about these levels right now. Aussie dollar. So I said this week and today in my trading room here, if you're not liking it right now, here's why. It's still in a rising wedge, right? The formation is right there. We're kind of trading it, anticipating what the market's probably going to do, which is come back down and test that, that base of that rising wedge. So the level that I'm watching and the level I want to see broken by the bears is 71.91. So when we see price on the right-hand side of that rising wedge and breaking below that low right there, Gary, that's 71.91. When that breaks, I have sell stop orders sitting lower, like 71.90, 71.75, 71.60. I'm stacking up some orders to the downside, because that to me is confirmation to add more to my sell trades. So I've already built a position that's going, through these highs and testing these levels. My break even, by the way, is 7,200. So I'm not that far off from where we're currently sitting. But if we break below 71.90, I'm going to add more to it. I'm going to add more to my winning position, because that's when price will hopefully take us into the bigger profit run. So that's my plan in Aussie dollar. I love the setup. This is a great example. This morning in the trading room, I'm looking at, there's Aussie strength and there's dollar weakness. So what are we looking at right now? More indecision. Every single day, we've seen the 30, 40 pip days. There's not a lot of volatility at these overstretched conditions. So I understand that the dollar's not ready to turn yet. But when we look at these technicals, there's something that's going to have to fuel this move. And again, it could be the Aussie with news this week. We have employment news for the Aussie. It could be the dollar this week. There could be a lot of things. But
I think you hit on the nail right there, Chris. I think you hit on the nail right there, because look at the calendar for this week right here. If you go to the calendar for this week right here,
and back to back, you have FOMC Wednesday, and then Thursday you have New Zealand GDP and Aussie employment.
Yep.
It just gives the market an excuse.
So my bad, there it is there. So we've got the US data coming out at 2 o'clock. Now with that, we'll take a look at the dollar index chart. But yes, US dollar coming in with the federal or the Fed's statement. We got the FOMC statement. We got the press conference. We got the rate decision coming out on Wednesday, and then that same day we got the Aussie unemployment change. Unemployment rate, and of course employment change. That's coming out that evening. So we got that back-to-back on Wednesday. Wednesday's going to be a crazy, crazy day of trading against the Aussie US dollar. But it's going to set some sort of directional bias for us. Now, check this out. If we go to the dollar index, let's pull that up right here and see what we're expecting of the dollar index. We are looking at the dollar index on a day-to-day basis. We're watching the dollar index right here. And if you look at the dollar index, what it's done is it's broken out of that big falling wedge right here. Broken out, we're coming back to retest again, and we're going to see a rally. Well, that's what we're anticipating. So we're anticipating this sort of test right here. We've got a nice little crown. I know there's a beautiful bullish crown setting up right here. We're going to come back to retest. Maybe we get to the right tip, but we're going to be turning around and be heading back up north. So we're expecting some rally in the dollar. And you know what's really cool about this as well? Is that when we do see this big breakout to the upside, then a lot of the pairs that are traded against the US dollar are going to be affected. And if it is that we're seeing a weak currency traded against the dollar, then we know that this is going to be a good strong rally to the upside on those pairs. So that's what we're looking at. And that goes for oil as well. US oil, we're looking at US oil. US oil is still trading at, well, it's at $38 a barrel, so it's lifted up a little bit right now. That may affect that Aussie CAD trade that, Tyson, you were talking about. Because stronger US oil, that's going to, and a weaker Aussie dollar, what's going to happen? Aussie CAD's going to push south. So that's going to be a good trade opportunity, like you said. You like the risk-reward ratio in that trade, and that could be a good opportunity.
I love the trade that Chris just said too. That exact level, that 71.91 level, is the exact level that I had marked off, Chris. When I said there's a great risk versus reward trade, that I think looking at this based on the technicals, based on where we're at, based on what's happening in the dollar index, everything that's happening fundamentally, I think this is a 70-80% probability trade. I'm already in it, but here it is. I love the sell on 71, sell on a break below 71.91, target of 66.50. Yeah, I think we can get all the way down to 66.50 and a stop of 74.15. Here's the beautiful thing. I've got that trade there gives me, as far as risk versus reward goes, that trade gives me about 540 pips worth of reward and 200. So we're talking about a 2.5 to 1 risk versus reward. So I don't need to win at 70-80%. I can win at 35 or 40%, and I could still make a lot of money in that trade. But I love the short at 71.91, 66.50 as a target, 74.15 as a stop. Risk versus reward is great. I think the technical setup is great. And if I weren't already in it, I think that's a very, very high probability, really great entry opportunity that Chris spelled out there.
Yeah. I like it too, Chris, and I'm with you all the way to the bank on that one. I'm already selling on this one too, and you know what? When you start shaving, I'm going to start taking my profit.
Yeah. Hey, well, the good thing is it's not just Aussie dollar, fellas. So, look, I've already gone. Here's the deal. I have waited already several months. In fact, last week on the Aussie dollar, we were 600 bars on a 4-hour chart. That is the most I've ever seen as far as an extreme. So I've already been very patient with the trade. This is only about 3 weeks of growth. It's going to get really ugly. I know it. But it's like I've been waiting 3 months. I can probably wait another 2 to 4 weeks. I can see where this thing goes. But it's like, look, it'll be fun for me. It'll be terrible for my wife. But I'm going to like the trade because it's either Aussie dollar, Aussie CAD, dollar Swiss, Euro Swiss, one of them, all of them. I've got positions built up where I expect to be paid on all those trades. And I'm hoping it's going to be a great payout when it's all said and done.
Yeah.
Clean shaven. But until then, budget.
Let's go ahead and shift gears right here so we stay within the timeline that we've got today. Pound crosses. We know that Brex is on the rise in. We know that the 15th of October, Prime Minister Johnson says he wants a deal by the 15th or he is pulling out. It's gonna means that a no deal means hard Brexit. This happened on the 15th. We need a deal right now. There's just they're basically on a standstill right now. There's nothing been happening. No real confirmation except for Monday. I know we had the they had a meeting on Monday, and there was a new bill that was approved. And that new bill is basically saying what they agreed on in the trade deal on the 31st of January. They're now saying that some of the stuff that they've got inside the agreement is going to be overruled, and they're looking to remove that stuff. So there's a lot of messes going on right now inside the negotiation. But we know that the 15th is pretty much going to be a D-Day. Whether or not they're going to be whether they're going to have a deal on the table, or are the UK is going to leave without a deal by the end of the year. They've got until the end of the year. The end of the year. But of course, the 15th of October is D-Day to have a deal on the table. Boris Johnson wants a deal by the 15th, and I'm sure the European Union wants the same thing as well. Yeah.
So
what's your guys' views on the pound pairs?
We've got probability. I think we've had 10 times with major news from Brexit since Brexit's come out. Like, hey, this is like a big date, and this is going to happen.
Yeah.
And every single time, except for Brexit, the only time that it came in as a very, very bearish, just absolutely destroy the pound after the news event came in was actually Brexit itself. Everything else was it prepares for Armageddon, it's let down, pound rallies. It prepares for Armageddon, let down, pound rallies. I expect the same exact thing. I expect the pound to get beat up like it has been. I expect the bottom to be put in. The pound's going to rally. So I'm looking at these low opportunities, these low levels. I'm looking at pound New Zealand, pound Aussie, pound dollar. I'm not the biggest fan of the pound dollar right now because I'm bullish on the dollar, but for a short-term pop. But I love the pound New Zealand at the levels we're at right now. Would not be shocked if we don't see two within a fairly short amount of time once we start to get some better news coming out soon. Pound Aussie, I love the long side. Pretty much all the pound pairs except for three I'm kind of avoiding, and it goes back into my whole risk on, risk off thesis. I'm avoiding taking any long-term positions long the pound dollar because, again, I'm bullish on the dollar, pound Swiss, and pound yen. Everything else I'm game on. I like pound New Zealand. I like pound Aussie. I like pound CAD. And I like all three of those to the long side.
Okay, Chris. We got the pound. Speak about the pound Aussie chart that we've got open right here.
I'm gonna be a little bit more neutral on everything pound related because you know what? We've had the same nonsense since 2016 where we just have to deal with it. Like, look, pound pairs are more expensive to trade. It's more difficult to build and establish a position on pound pairs. Here's my thoughts. I think that if you look at the weekly chart, the daily chart on a pound CAD, there's room to go lower. You look at the weekly chart on a pound Aussie, pound New Zealand, there's room to go lower. Look, right now, until this whole thing is filled and the overall fuel is bearish on the pound, look, we had a crazy sell-off over a week. It forced traders to all of a sudden notice oh my gosh, the pounds were the only thing that was moving. And now we are pausing. So rather than sitting here saying that's the bottom, I told traders today, if you're trading the pound pairs, if you're buying the pound, you better have a stop. If you're selling the pound, you better have a stop. Like right now, it's like short-term trading in order to see what the next big leg is. I think that this is opening up at least the floodgates for more movement in the pound, but I don't want to be on one side of the trade. So what I'm doing is I'm trading smaller, more neutral with something like my sentiment strength line that once we see a new line and a new direction, it'll take the trade. So if it's going to stay bearish on the pound, I'm going to sell it. If it's going to reverse and go bullish on the pound, I'm going to buy it. But I'm going to let the robot do a lot of the heavy lifting for me on the pound pairs. So
you know what? That's a smarter move, guys. That's the non-emotional, smart, let's just trade what the charts are giving us. Yeah. Forget about everything that I just said and listen to what Chris just said.
Or let me be like a devil's advocate here. Or if we go ahead and manage the risk that we place in interactive positions. So to really scale down your positions, if you want to get in on some of the action, scale down the positions. If you've got the same sort of input or the same sort of look as what Tyson has and say, hey, this is bottom, and what's going to happen, we all know. When there's a bottom being identified, there could be some manipulation in price. Price could drop back and come back up again. So what you do is you go say, hey, I'm going to buy in with very small, just scale in with a little bit of positions in at the support. Then go ahead and say, all right, 500 pips below that, I'm going to go ahead and scale in again, put an actual opinion order there to buy, it's called a buy limit order, 500 pips away, and then another 250 pips away from that, put another buy order in there, put another buy order about 250 pips away from that, but allow the market to breathe about 1,200 pips and scale in at that position. And if we do have this big whoopie-lashy type of move and price moves down and comes back up again, like we've seen happen, it's going to put you into those positions, lock you in, and then it's going to, and then the price goes back up again, you're in the money, and then you can manage your position from that point onwards. But allow it to have about a 1,200 pip buffer. So if it gets to 1,200 pips and you want to call it a day, you're not losing 100% of your account or even a big portion of account, but you're taking a small loss, but you're scaling in to get part of the action. So the one thing that is frustrating, you guys will know, right? And I know the same, right? It's better to be out of a trade than to be in a trade that you don't want to be, right? But also the most frustrating thing about traders is that sometimes when you're sitting on the sidelines and you're watching the market move and you see all these opportunities, you're like, oh, if only I did this, if only I did that. Well, get part of that, you know, get part of the action by just scaling down your positions, scaling it down that you've got such wide stop losses, but you're getting part of the movement and allowing the market to do what it needs to do. And I've done this a lot of times. It happened with Brexit in 2016. We did the same thing. Wasn't really too sure exactly how Brexit would play out, but what we did do is we had positioning that were locked in, far apart from each other, small positions in, and when we had the market doing what it's doing, we're like, okay, boom, we can picked up, and now we waited out, and now price moved back up again. We go, well, now we're in the money, you know. So allow for price action.
As Chris said, the only issue with that is the margin. It's in a position like that, you got to have proper margin management because you know those pound pairs can eat through margin quite a bit. So I agree with you. I think that I think we're within 2,000 pips of a low and maybe 5,000 pips on the upside. So as far as if I look at it that way, risk versus reward is good. I should be buying, you know, in this level and look for that nice rally higher. However, again, that margin management is going to be key. If I'm going to level in every 250 pips or whatever, I just got to make sure that I'm not eating through all my margin and I can do all my other things also.
Sure, and margin will come from how many positions, how many lot sizes you had to. So when you're scaling with very low lot sizes, your margins are going to be a lot lower too. Yeah. Yes, the margins are going to be increased during this period, but still, if you're trading with lower lots, you can get into the trade without exposing too much margin out of your account, and then risking the trades that you're currently in from being margin called. So yeah, if you don't want to run out of margin, so absolutely key equity management, making sure that you manage that and expect margin increases and expect higher spreads. Or larger spreads. Those are the type of things that you could expect during that volatility period.
So quick question to you, Gary, and both of you. So I think I'm kind of on Chris's side. I like the positioning longer term. I like the to buy at strategic points in the pound pairs. But I also understand where Chris is coming. It's like, hey, there's better opportunities. I'd rather be in the Aussie pairs. I'd rather be in other pairs. Why even stress about is this the bottom in the pound? What's your thoughts on that, Gary?
Because of greed.
I get it. I know,
everyone wants something.
It's going to be awesome,
but you're right. But you know what? To go back to Chris's point, and Chris had a fantastic point about, hey, let the automation do all the heavy lifting for you. That brings me to the pound Swiss franc, because we spoke about this morning in the trading room. And the pound Swiss franc, and I'm sure you guys covered that too. Pounds at a bottom right now. But are we going to get in right now, or are we going to allow the automation to go ahead and deploy it when the time is right, when the logic is lined up? Check it out right here, guys, and you'll probably agree with me on this one right here. Check out the pound Swiss franc. Pound Swiss franc, got in this morning, we said, hey, check this out. We're at the bottom of support. What are we going to do when we're at support? We buy at support. Do we just jump in right now? Well, that's one strategy. Another strategy is to go ahead and use your automation. And if I use the Right Trader Max as my go-to strategy, and I know that there's a whole bunch of fantastic strategies that the company has that traders can use. But if you go ahead and let me just kill this one right here. But if you go ahead and look at the 1 hour, it's too far away to get in, right? Because the 1 hour has to go above the prices go above the ribbons in order for to trade it. So if you want to pick the bottom, and that's what we did, we went down to the 15-minute time frame. We said, you know what, we're going to go ahead and get in on the 15 right here, and there it is. There's the trade. You can see there's the buy in there. Our stop's below there. We're in on that trade. So we did that. We looked for support. We were at a good level of support on the daily. We said, listen, we don't know if this trade's going to go north or it's going to go further down south. But what we are going to do is we're going to allow the automation to go ahead and put us into this trade. So we found support. We then went ahead and deployed the automation. The automation found the trade. We're in right now, and now we just let it do what it needs to do. And just like on Chris's point, we have stop losses in, so we're protecting those positions. So if it goes against us, we're out. We're taking our losses. We get out of the trade. But if it does go in our favor and it does move in that direction, we have a trade that is in and it's moving off that support. So we're in on the pounds to strength based on that bounce.
Trade it, but be strategic. Have a system, have a process. So, hey,
Yes.
I love these pairs, but let's not try to willy-nilly pick the bottoms. Let's use systems. Let's use automation. Let's use robots to be able to do it for us.
Yes.
Yes.
Absolutely. I love the hybrid approach. The hybrid approach helps us to eliminate emotions. The hybrid approach allows us to be able to use the large time frame to identify the directional bias, and then use, which is fantastic. I mean, 25 plus years ago, I didn't have automation. The only thing that was automated was this, that I could still do the washing with the washer, or do the dishes with the washer. Those are things that are automated at that time. Trading was not automated for us at that time. So right now, after going to doing everything manually, and now having this technology to be able to do everything for us, that we can go ahead and do whatever we want to do. Play golf. Spend some time with the family, sleep. That's one privilege that we have right now as traders, that we can actually sleep while the markets are moving. So when you're using automation, use it correctly, but find it like Tyson said. There's a process. Make sure that you got the process right. When we're going to deploy, how we're going to deploy, what direction we want to deploy. Those are the things that are important as a trader when using automation, and that's why it's important, traders. If you're not inside one of our trading rooms, get inside the trading rooms. Go to Chris's trading room. He's talking about automation. He's talking about how to be able to combine the two, technical and automation. Tyson's doing the same thing. Great technical analysis combined with automation. It's going to help you. I'm doing it in my trading room. This is really, really important to become a successful and a consistent successful trader. You need to be able to understand the difference between technicals and automation, and how to be able to combine the two to make profitable trades.
Hey,
So,
Gary, can we talk about that just for a minute? Because this is so important. We've got a lot of
Yes.
traders that watch this, and everybody who watches, if they've watched to this point, you have the trader seed. You want to do this. That trader seed is never going away. I don't know about you guys, but I've never woke up one day just because I had a bad trading day today and said, oh, tomorrow I'm not going to trade. It never goes away. So for me, I had to see it done first. I had to see success. I thought that I could do this on my own, and then I failed dramatically. And I had to see somebody succeed. I had to watch it be done. I had to get mentored before I was ever going to succeed myself. Did you go through a similar path to that, where you had to see it first before you were going to do it? And would you, like me, I think I highly recommend everybody finding those who are doing what you desire to do and just mimic what they do until you make it your own eventually. You guys agree with that?
Absolutely, but I'm as old as dirt right now. So at the time when I started trading and I started doing this stuff, there was
Gary
no
was
one
still
that I
carving
could
his
actually
trades
sit
into a
behind.
stone, I think, when he started trading.
Don't you do that, Chris? But but you're right.
Look,
you're
I
absolutely right, Tyson.
It goes for anything. It goes for anything. Is any skill, any acquired skill, anything that, like an apprenticeship, a mentorship. We're all going to learn faster by doing. And when you can see somebody doing it the right way, look, I'll be honest too. I think that we learn faster by mistakes. And the crappy part is mistakes in these markets as traders are really expensive. So it's nice to learn from someone else's mistakes, but it's like if you're doing it right alongside them and they make a mistake and you see how they handle it. Look, Gary, if you take a loss, Tyson, if you take a loss, if I take a loss, look, we know it's not the end of the world. We know that we're going to turn around the next day. We're going to get back up, put our pants on one leg at a time. We're still going to trade. Right? So it's like nothing's going to stop us from continuing to do what we do. So if traders can at least acknowledge that we learn from our mistakes and we still make them, and we're doing the same thing we want to do, we're going to focus on the process. And it's like no win or lose, like no winning trade or losing trade will define us as a trader. So Tyson, I know that you've constantly said mentor, get in the trading rooms, and we all emphasize that because I think the fastest way for somebody to come on board in market traders take the Ultimate Traders package, take some other courses, get inside our trading rooms, and see that there is a process and routine that we each have. We each do it differently, but in our own way, we have tailored our personality to our trading styles, and we're comfortable in our own analysis. And what's amazing is about, even though we've all kind of had our own unique journey to get here, and everybody does, we commonly come together with sessions like this and we see the exact same trade. We see the exact same direction. So clearly we're doing something right to have the right analysis, to have the right directions, and have winning trades. But how we get the job done, whether it's with automation, whether it's manual trading, whether it's higher time frame, lower time frame, that's just our preference. But at the end of the day, we just have to be comfortable and confident in how we trade, how we manage our capital, and how we take profits and move on to the next trade. You're only as good as your next trade. You're only as good as your current trades, right? Like, nothing should be all in, all out. You're just going to keep trading. Keep trading. So keep in the game, survive the game, keep trading, enjoy it. It's a process. And I keep saying it, process takes care of the profits.
Absolutely.
Yep.
All right, guys, let's come to the end of the session, but I want to go ahead and leave you with this. Tyson mentioned in the beginning, he mentioned, I think it was the SYQ, am I right?
SPAQ.
Yep.
SPAQ? All right.
Yep.
Tyson's going to be talking about...
I started talking about it. Got to pat myself on the back for 2.
There was a rabbit hole last week.
Helion, by the way, I talked about in these sessions. I believe it was this session, Chris. I know you and I talked about it. I'm not sure if it was in this session or not. About a month and a half, 2 months ago, it went from 25 to 53. Now it's trading at about 43 or something like that. But this thing doubled. SPAQ was at $13.50 or something like that last week. It's sitting at $17, almost $18 now. Guys, it's not done. I'm telling you, I have a 5-year target of $250 in this beast, and I think it has a chance of hitting maybe even $100 by the end of the year. And I'm not joking.
Well, Tyson, I don't want you to give all the secrets away right now, because I want them to come back next week ready to prepare. Bring pads, bring everything.
I'll save it for next week, but there's one more that I'll save for next week.
And I want Tyson to go through. And by the way, to get back next week, same session next week, same time. Actually, we're going to be back on Mondays. We had to schedule it this Tuesday, but next week we'll be back on Monday again. But this is what I want you to do. I want you to come back prepared, because Tyson's going to go ahead and tell you exactly what he's done, where he's at right now, and where he's going with this, so that you can take advantage of that. So make sure you guys come ready and prepared. We're also going to talk about additional currency pairs. Brexit is still something that we're going to discuss. We'll talk about the pound pairs. We'll review the Aussie, because remember, we're speaking about Aussie weakness right now. We will go ahead and review it next week as well. But very importantly, if you want to know day to day what's happening to these pairs and how things are moving, get into the trading rooms. I'm going to tell you right now, Chris is talking about some fantastic stuff you don't want to miss out. Tyson's got some absolutely key things that he's talking about, not just on currency, but on stocks too. And I'm talking about, well, just cryptos, nothing important, all right? Except that I'm in, by the way, I'm in with the Ethereum. I bought Ethereum at $335 when it dropped back down. I told you guys it's coming down. I sold everything in Bitcoin. I said, I'm done with you, Bitcoin. I invested everything into Ethereum. I got it at $335. I'm expecting $480 to come into play, and even higher if Bitcoin continues to rally. Listen here, we're going to talk about that next week. I'm excited about it.
Before you're done, I'll bet you $1,000 you're not done with Bitcoin.
I might get back in it if it comes down. If it comes down. Hey, listen here. If you're right about Bitcoin and it's going and it's flying right now, I'm in on the right, because you know what? Ethereum pays out so much more money in the rallies that we see now with Bitcoin and Ethereum. So I'm investing in Ethereum because of. We'll talk about it next week. We'll talk about why I got in Ethereum and what is the difference between Ethereum and Bitcoin based on rate of return. We'll talk about that next week. Hey traders, listen, I want to thank my team, Tyson, Chris. Thank you guys for coming in. Great conversation. We'll bring back this conversation next week. It's going to be hyped and excited. Make sure that you share this video. Go ahead and share the video. Comment on the video. We want to make sure that you get more traders into this session. If you have not subscribed to the channel right now, go ahead and subscribe right now. And then do us a favor, go ahead and smash that like button as well. That'll be an added value for us as well. Thank you very much for your time. We appreciate you. And thank you for the team. Thank you, Chris. Thank you, Tyson. We'll see you guys next week as we continue the session. All right. With that being said, traders, have a fantastic week of trading. And we'll see you in the trading rooms.